Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Simon Gregson and Jon O'Donnell, both of IBM, and we're going to talk about core banking. So, Simon, I'm going to start with you, and I'm going to focus on a survey that IBM put together looking at attitudes to core banking. And in the survey, it wrote that a lot of assumptions were both challenged and supported. So I wanted to ask you, what were some of those assumptions?
So I'll just talk about 3 or 4 that kind of piqued our interest as we're going through the results. So the first one is that we were expecting to see that the current demands, digital front office particularly, would be driving the need for more wholesale transformation. But actually, when we went through to the banks, nobody's really taking on a large-scale transformation at the moment. Mm-hmm. The digital front office isn't driving that. They're finding ways of getting around it without doing that. Secondly, kind of the opposite side of that, we're also expecting that the regulatory pressure that banks are having to deal with was sucking up budget and actually preventing them doing digital front office work. But again, we didn't find that was true. They're finding ways of doing it. They're finding ways of coping through incremental change. So when I say coping, it's quite an interesting word. So what we've observed is banks have put themselves in a kind of holding pattern, okay, where they're managing to meet the immediate demands in front of them, but very few of them are really making much headway in their strategic demands. So there's a range of different techniques being applied. So some banks are actually managing to componentize their architectures, introduce rules engines, MDM, and get a little bit further. But most banks are on a short-term incremental approach to change that really isn't actually improving things beyond getting the immediate job done. And that's going to turn around and bite them, I think, in the near future. Mm-hmm. So the third area that we pulled out was when we asked banks about their attitude to the industry, they were quite pessimistic and thought there was a need for quite a bit of change. When we asked them how they were doing, they thought actually they were coping better. Okay, so there's a mismatch, and both can't be true. So that'll play out, I think, over time. And the final area was when we looked at actually what are the key technology drivers, we found that cloud and social were at the bottom of the list, which again surprised us. We thought they'd be higher up. And I think when you examine in more detail, because it's about core banking, it's just not high enough on their radar yet, but we expect that to change going forwards.
Jon, I'm going to move on to you, and one of the things in the survey that didn't personally surprise me was that no bank was undertaking sort of this massive core banking reinvention, despite the fact that there are so many more demands right now on core banking. So why do you think this is?
Well, certainly cost is a key factor. With all the banks in Western Europe having bespoke systems, either because they've developed it over 30, 40 years, or because they've taken a product and then customised it so much that actually is effectively bespoke, the cost of change is massive. Only a couple of banks that we interviewed have got a system that's product-based, really. And so that's a key element. Now, risk is another key factor. Mm-hmm. If we look at the core banking transformations that have been more extensive over the last 10 years globally, very, very few have succeeded. The majority have been abandoned halfway through. And CIOs these days have got tenures that are not expected to be more than 3 years. So if a banking transformation end-to-end will take 5 or 6 years, then there's more chance that they will fail than succeed within their tenure. In addition to that, you've got regulation driving a significant element of their cost pressures and their investments, and therefore what's left is going on the digital front office transformation. Now, there's then a range, so nobody is trying to replace their core bank end-to-end, but there's a range in terms of how they then are approaching this topic. Mm-hmm. Some are being extremely tactical and short-term and actually just making their complexity problem that they have even worse. Whereas others actually are cracking on with the digital transformation, but doing it in a way that's actually setting themselves up for the future by bringing in the sorts of components we talked about, making their whole architectures more modular and more componentized, and allowing themselves to become more agile going forward. So not an end-to-end transformation, but nevertheless moving in the right direction. Mm-hmm. And so a broad range of responses, but CIOs don't want to take on this end-to-end transformation.
So, Simon, we're going to talk about cloud right at the moment, and there are a lot of perceived benefits to cloud, it being very agile and being low cost. And you mentioned in your earlier answer that cloud came down pretty low on the list of priorities in regards to core banking. So my question for you really is, why? Why is that?
So I don't think it's a question of importance to banks. We're seeing a lot of growth in the use of cloud in banks. It is actually about that core banking aspect. And I think there's two sides to it. One's quite generic, one's more specific to core banking. So on the generic side, so cloud's used, principally thought of as an infrastructure issue. Okay, banks are getting quite used to it. It's becoming quite routine. It's not really differentiating in the way they manage things. It's just another tool in their box. Okay, so the second side of it is when you look at the core banking aspect, we're looking at applications now. Some have been running 30, 40 years. They're inherently very stable and very predictable. And the thought of moving onto a cloud introduces a level of unpredictability to it that makes people nervous. Couple that with the regulatory pressure you get and fears around security, and people are reluctant to move. And then the final point is, actually, cloud enablement is really driven by change, as we've talked about. We're just not seeing that level of change in banks. So that's one aspect. As you start looking forward, we start seeing software as a service and service as a service coming through. And things, again, are changing there. So we're seeing banks are starting to look at things like HR, enabling HR through the cloud. But the core banking aspect's still over the horizon. Though at some point it's going to come marching over there fairly quickly. So, what will change things? So the foundations are in place. So first of all, banks are building their own private clouds. That's going to give them a springboard. And when you start looking at the way they manage to modularize it and break the applications down and get a bit more agility at that level, they can start exploiting the cloud itself. And we're looking at it particularly in the area of perhaps entry into new markets. So an existing bank exploring a new market, the ability to land and expand very quickly. It's very, very interesting to us.
So John, we're gonna end with you, and there isn't a week that goes by in Finextra that we don't do a story about the new digital age and online challengers and the wave of disruptors and disintermediators. But you mentioned earlier that there is no bank, doing a full core banking reinvention, and they're sort of looking at their systems in a more piecemeal way. So my kind of last question for you is really, given this changing marketplace that the industry is now in, what is the reality banks are facing with their current attitude to core banking?
Right. So at the moment, as we've discussed, the banks are in a similar sort of place, taking a similar sort of approach, and they're in a holding pattern where they're delivering the regulatory changes that are mandated, and they're tackling some of the key priorities around digital transformation. So they're sort of together. There are a variety of approaches, but at some point one of the existing banks will break free and forge ahead in terms of how they're using their technology in their core bank, or probably more likely one of the new entrants, whether it's PayPal or someone more further afield like an M-Pesa type solution, they will come into banking and really disrupt the market. Now, it's at that point that many of the things that we've talked about this far really come into play. So those banks that have been more forward-thinking in terms of how they've been approaching their core banking will be able to respond. And they'll be able to respond because they develop their technologies and architectures in a way that could adapt. They would have moved towards more componentized approaches. They would have leveraged middleware to bring things together. They would have pulled out the customer and the product master data separately. They'll be bringing in rules engines and even the regulatory reporting they'll be setting up as a separate service. And so although they've never changed their end-to-end core bank, they'll actually have got themselves to the point where they're quite agile and can respond. And they will be the ones that survive when the new entrants really start to forge in. Now, in addition, I think it's important from our perspective that banks look at the true end-to-end cost of their core bank. Their business cases tend to be looked at from an IT perspective, but actually much of the cost is really in the business. And therefore, when they look at business cases for this change, they need to look at it more holistically. Now, as they move towards this more modularised approach with greater clarity on the business case, then actually a different type of approach to sourcing becomes possible, because they then can actually source individual components in a different way, as a service, for instance, perhaps using cloud and other approaches, rather than having to try and replace the entire end-to-end solution. So they have a way forward to respond quickly. And if they're going into new markets, for instance, they want to go into a new savings product or into a new market, then actually that sort of approach is what's going to really enable them to move quickly as the new entrants. That's our recommendations.
Excellent. That's very good. John, Simon, thank you very much.
Thank you.